I'm Dan Wilton, the CEO of First Mining Gold. First Mining is advancing its Springpole gold project in Ontario, Canada, one of the next projects to get environmental assessment approval, and continuing to have great exploration success at our Duparquet gold project in Quebec.
Dan, good to see you.
Good to see you.
How was BMO?
It was good. It was a very busy time.
Right.
I think the tone, obviously the gold price kind of helps the tone. I think we saw a lot of new investors who we haven't met with before, which is helpful. We
should explain BMO what BMO is for some people. That's where the big boys go.
It is probably the largest large cap mining conference in the world.
Right.
Certainly one of the best attended from both an investor and a company perspective. So it's great that, for us, it's a lot of corporate development type meetings there as well. But investors starting to look a little bit down cap. It's typically a large cap investor focus there, but investors, a number of them, starting to look down cap and look for those opportunities in late stage development projects like we have with Springpole.
It's kind of like the Colorado Springs, but sort of this time of the year. You kind of got those two kind of bigger conferences for the bigger, more advanced projects.
Correct.
They're much more serious conversations.
Yeah, I think that's right. I think they tend to be more focused on large cap, and we sort of slide around in the middle of the milieu there.
Let's look at that, okay? Because we talked the last few times about how few Canadian projects of an advanced nature of a certain size are left.
Yep.
And recently, we saw Equinox pick up Calibre.
Yeah,
they've got to integrate that, and who had picked up Marathon, etc. So it's all been a lot of companies being taken off the table.
Yeah, well, and I think you look at that Equinox Calibre deal. It was done very clearly to build a Canadian production base. So the fact that that merger had to come together with a lot of other assets to essentially really talk about two brand new built mines in Canada as the long-term cornerstone assets. I think that speaks volumes about where the next producer is going to try and find that next leg of their stool. They've been trying to buy producing assets for years. And they haven't been able to merge for whatever reason, social reasons, don't like the old tired assets that the other companies have, et cetera. So, Stephen Dean at Artemis does a very good job of articulating the fact that the only low-cost mine that you're going to find in Canada these days is one you're going to build yourself.
Right.
And so that's where, we're starting to see a lot of investors and corporates looking at really where are you in this development timeline? Where are you in this permitting process? And when do you think you could get shovels in the ground? And obviously Springpole stands up pretty well on
so those absolutely, and we'll come on to that in a second, but those are the things that matter more than the cost of the project in a kind of meaningful way, in the sense that people go, why on earth would you pay that amount of money, but in this kind of environment when gold is at this price? It's crazy, but it's not necessarily all about the money up front for paying for it. It's about the huge de-risking process that someone with a project that you're attracted to that kind of suits your portfolio. That de-risking is the key here, because things fall over. Yeah,
and historically, certainly in the last 5 years, most of those producers have been willing to wait. Wait until you at least have that environmental assessment approval, which kind of in Canada is the main licensing step. So you get the EA approval, and you've seen it time after time with Marathon, which was in construction. Saw it with Greenstone when Equinox and Orion bought it the first time. It all happens after you get this EA approval, and then these big projects tend to get valued at $100 to $200 an ounce. And so, the reality of that is buying those projects for $200 an ounce. You then build them. We all think about capital cost and $1 billion of capital for something that's, 5 million ounces. The reality is it's like another $200 an ounce in capital cost, let's say, which, you pay up front and then generate the benefit of over time. It still leaves you in a $3,000 gold environment with an enormous amount of margin, right? So that capital risk if it's 200 or if it's 300 bucks an ounce, you know, that could be a big swing, a $500 million swing on a 5 million ounce project. But in the grand scheme of things, it's actually not that material.
That's the point.
To a producer that is in the rest of its business facing, you know, declining reserves and trying to figure out where they put the next leg on the stool.
Yeah, and then also the timeline.
Yeah.
Right? The time. I guess what I'm trying to do is set up the environment in which you have inserted yourself, right?
Yeah.
So we know what the purchasers, the buyers, the acquisitors want and what they need, and why, in terms of the cost of that is almost secondary to some of these assurances that they're going to need for replacing the reserves, resources and reserves, right?
Yep.
So let's talk about you, where you're at. And I quite often ask you about kind of where you are in that kind of EA process, what percentage of work has been done, because it doesn't go from 0 to 100 overnight. There's a lot of work going on in there. So where are we at the moment?
So, you know, for a refresher, we entered the environmental assessment process in 2018. So we are now 7 and a bit years into the EA.
Which is normal.
Which is normal. Listen, if we had unlimited funding, there's a couple of things we might have been able to do more quickly. But not like 3 years.
Yeah.
It maybe would be 5 years in terms of just the process that you have to go through, you know, collecting baseline data, our draft EA process where we shared that with the regulators in 2022. And we've now been in dialogue over the current project configuration for 3 years. And now we're at the stage, submitted our final environmental assessment in November. We had a public comment period, which ran from December to January, so that's closed. Still collecting input from a number of the Indigenous communities that we're working with, which is really important at this time for us to get that, but answering a lot of those questions as well. And progressing, we're in the point of back and forth now with the regulators. So we received a bunch of comments from the Federal Impact Assessment Agency and all the federal agencies. Those are all coming provincially shortly. And we're in this kind of comment response where, you know, they send you 100 comments, you respond to those. You know, that then comes back as another 30 questions and you respond to those. And, you know, there's probably 3 or 4 kind of back and forths. At which point, you know, all those questions have been answered and the project is deemed complete. And then on the federal government side and the Impact Assessment Agency, they have a defined period of time left that they need to write their report and make their recommendation and make their decision on the project. So we're still targeting that, making that decision by the end of the year.
Okay.
Federally. Provincially will likely slip into next year. But, you know, this is, again, we're 7 years into a process. And I've said to a lot of people the last couple of weeks, the only thing worse than being 7 years into a permitting process in Canada is being anything less than 7 years into a permitting process, right? Because it's going to take time. You're going to have to go through this process. So we're getting to a point this year, and not too long, where we're going to have a defined time frame in which we are going to see that federal decision, which is very important.
Okay, so again, coming to this environment in which you're operating, right?
Yeah.
It's kind of a seller's market in a way. You've got to kind of, you know, slap on a bit of makeup and you're kind of going through that process of saying we're de-risking, and we're almost ready to go out for dinner. But we've got a few things left to do, and I think they're the important things, and I kind of want to get into it with you. So, you know, you talk about the kind of federal components, the approvals process, as it were.
Yeah.
Because if you can advance that, you'll get to a point where they will start making recommendations about, you know, who they are going to back effectively.
Yeah.
Right?
Yeah.
And it's not going to be everyone at the same time. You know, we talked about, you know, whatever analogy you want to use, next cab off the rank, etc. That process of engagement is so important for you guys. So can you tell us a little bit more about, you know, how much more is left, and, you know, is it just this toing and froing of swapping of information, or is it, do you still have to prove yourself in a kind of meaningful way? Are there big red flags that we should be looking for?
Yeah, I mean, at this point, like I say, we've been going back and forth on the project design and the key components for 3 years. So there's kind of nothing new. And in the comments that we received, there's really nothing new in those comments that, we hadn't already discussed at some
Right.
point. So it's just a formal part of the process of asking questions and responding. Again, there's still some really important comments to come in, particularly from the Indigenous communities that we're working with. A lot of that work
Do you treat that as
ongoing
the
now.
same thing?
It's all actually feeds into
Right, okay.
both the federal and the provincial process. So, and in important ways. So, there's a lot of, I think still a fair amount of work that we're going to need to do to answer the questions that have come back from the communities. But a lot of the things raised are, not surprisingly, the same issues we've been talking with the federal and provincial regulators for 3 years about. It's just really getting into the detail on, what are the water quality models and all the other things that demonstrate that you're going to be able to build and operate a mine without significant impact to the environment. So we're in a really important stage now in this back and forth. But important to understand on the federal side, like there's a fixed number of days, right? And that clock starts at 365 in 2018. But when they are on the clock doing their review of things, the clock ticks down. And then when they hand things back to us, the clock stops. So there's
speed chess.
It is speed chess. It's exactly what it is.
Yeah.
So we're at the point now, I think, at about 241 days left on the federal clock. It was 311 days when we submitted our final EA, right? So the significant amount of time that everyone is spending doing their reviews, and that's great. We just got to keep going back and forth on that. But ultimately, targeting this EA approval, EA decision by the end of the year. And I think that's, a major, major milestone for everyone from the outside looking at the project, be it investors or be it corporates.
And on the federal side, and I appreciate it does cover the First Nations bit, but I want to treat that separately in a second. Are they here? What are they talking about? What are they? Because they've got to kind of promote their own province, right?
Yeah.
They can say, we're open for business. We are engaged in helping, firms like yours to actually get through this, navigate this path. Are they standing up at PDAC and talking positively about mining?
Yes, absolutely they are. I mean, I've come to realize, and particularly in this kind of U.S.-Canada relations, tariffs, and everything that's happening right now. Yeah. You've seen some of these jurisdictions. Yeah, you haven't heard that here, have you?
No,
since you've been landed in Toronto.
You barely mentioned it. The Canadians have barely mentioned it.
Yeah, no, it's remarkable, isn't it?
Everyone's angry.
Yes, but we won the hockey game, so that's all that really matters. But in the end, you've had a number of jurisdictions. BC did a very good example where the premier stood up and said, we need to control our own destiny. In order to do that, we need to fast track our approval of these projects, and named a number of projects.
It's not bypass, but fast track in the sense that
we are focused on these and driving toward, doing the work so that we can sanction these projects.
Do it the right way, but do it quicker.
Correct.
Got it. Okay.
Yeah.
First Nation side of things is really, really important. Okay, in terms of not just like, we've got to persuade them that everything's going to be okay, but in terms of engagement.
Yeah.
Right. So that's a case of like, what are you going to do in the community? What does it mean for them? What do they want? Remediation at the other end is clearly critical in all of this.
Yep.
How are they engaging with you? Is it reluctantly? Are they helping? I mean, what does that process look like?
So it's different with every community that we're working with
around
Springpole. So the one thing I can tell you is they're all engaged. A number have retained, technical and legal and business advisors. And so they've gone through their own review of the environmental assessment. They've sent us and the regulators lots of comments that reflect the questions and comments and concerns that they have. And those kind of get incorporated there into those discussions. And, our goal is to be sitting down with the communities and making sure that while we are talking about the risk side of the ledger, and there is risk in every project development, but while up to now, a lot of the communities have been very focused on doing the work needed to understand the risk side from their perspective, and understand the impacts. And that goes to, with a number of the communities we funded this Anishinaabe-led impact assessment. So really looking at the project from an Indigenous lens. The other thing that we think it's critical that the communities understand is what's the potential benefit? What can this do to really give a generational opportunity to the youth in the community for employment and training, for business owners in those communities or aspiring business owners for contracting opportunities? Quick numbers are, with Springpole, between construction and operations, there's more than $4 billion of procurement that's going to happen here. Right? Like, it's an enormous opportunity for communities to find joint venture partners and actually understand how they can participate in some of that margin. But the most important thing, I think, is how are those communities giving a sense of hope to the youth in those communities?
To stay there, I guess.
To have an opportunity to have, productive employment, build a career, build skills that can go well beyond this project, but be contributing to something that is close enough to the community that in some cases, we hope when the infrastructure is built, people could drive home at night, Like, it's a really once in a generation opportunity in this part of Northwestern Ontario to deliver not only jobs, employment, training, but direct economic benefit, because there will be, a degree of profit sharing that will go with it. And the infrastructure build is one of the most important things, bringing a power line up to a new area, bringing road infrastructure. It'd be our intention when, trying to work with one of the communities about getting an all-season access road, which right now they would only have, winter roads that go in maybe for 6 to 8 weeks a year, right? It's a very different sense of hope, I think, that particularly young people in those communities can take away when all of a sudden there is a connection to the outside world. There is a road. There is an opportunity to change your location. And so, I think that for us is one of the things that I get really excited and really passionate about is
I can hear it.
How are we working together to make sure that the community is going to benefit from that? And so our discussions are at different stages with different communities, but all driving in that one direction, which is making sure that there are structures in place that give the community a real voice and real access to understanding what's going on at the project. And then those contracting, employment, business, and direct revenue opportunities.
I can hear the passion. This is the bit that gets you going. It's also this at the pointy end of the stick, in a way that it's really close. So everyone's kind of leaning in, I think, and say, well, looks like this thing's happening. Is a point where it could happen if we all get agree around the table. It's happening. The other side, I'm going back to the BMO kind of conversations. They're also now looking at this thing. This thing looks like it could happen now. Do you know what I mean? Because I speak to a lot of companies at various stages of evolution, and a lot of it is hopium and dreams and aspiration and so forth. But when you kind of get to this kind of rather laboured, almost boring, administrative bit, sometimes retail go, I'm off somewhere else. But actually, this is the important bit. This is the important bit. And when we get asked for, which companies are the ones you should be looking at, we point to companies like this and say, look, these advanced development stories are really, really important. Not necessarily getting the attention and the love, but this is exactly the moment you step in. It's contrarian, if you want.
This is the deep value opportunity, because the catalysts are coming, and the time frame that you have to wait for those catalysts is a lot less than the time frame that I have had to wait since I joined in 2019. Never thought it would take this long or cost this much money, but here we are. We've done the hard yards, right? And so what are the big catalysts that you see coming on the project licensing, on social licensing in terms of agreements with communities, and then on, call it that project validation of exactly what you're talking about, where all these gold producers are looking now and asking themselves, so they all want to own projects in Canada. That goes without saying. Sizable projects. We've got 2 inside this company that fit a pretty rare bucket. And we want to put the money into the ground. So we want to actually get something built between now and 2030. If you're not finishing up an environmental assessment process in the next 12 months, you're probably not pouring gold before 2030. You know, just the reality of it, right? It's going to be a 2 to 3 year construction period, and there's going to be a period of permitting post environmental assessment. So that's really starting to dawn on people, and it's particularly impactful if you're a producer with a mine that's got a 10-year mine life, right? Or an 8-year mine life.
Yeah.
Like if you need to replace that and you're not going to be able to grow out of it around your existing project, like you need to be starting now, which is why all these other projects in Canada have been bought from 2020 to 2025 between Greenstone, Magino, Valentine, well, Greenstone twice, now Valentine twice, Blackwater, like these Cote has been funded. There's all kinds of speculation about, what that means for IM Gold going forward when it gets built and when it's producing, at capacity. But all these big projects have been, funded or bought. And what's left? It's a very short list. When you actually really dig into where a number of these other projects are in their permitting, if they're not as advanced as we are, having spent as much time as we have, it's not like there's a whole bunch of things that are just going to skip the queue and you're going to be able to build. Yeah. So that scarcity value is actually starting to get recognized in the industry.
Yeah, and I think if we look back the last 2 years, it's projects like this that have kind of saved our bacon because the explorers have really been crushed.
Yeah.
And I like that certainty. I like that kind of boring conservative certainty about doubling or trebling my money in a market like this. So people have got to take a view, not just on gold, what the gold market's going to do. You've got to take a view on what the dollar is going to do.
Yeah.
And we've all have got strong views on that one this year. And that should determine your investment thesis, or certainly a large chunk of your investment thesis going forward. It's risk should be off the table, and we should be maybe thinking about where to deploy capital in a creative way. So it's definitely interesting times. We've better park it up because I know you've got places to be, and we've actually got Equinox coming in now to tell us all about the Calibre deal from the horse.
Can I stick around and watch that?
Hell yeah! Just shout questions in, because that is a very good example of where you're at and the problem that they've solved by doing what we've just talked about. That the depletion issues that they've got. I was saying they were also bringing on Greenstone properly as well, but they need the new resources, they need new reserves, they need to tell a growth story.
Well, and they've got 2 long life, brand newly built assets. The nice thing about a mine that's just been built is it tends to not need as much surprising capital as old mines do, right? So,
and I think they obviously had issues back in the beginning. If I go back to 2019, 2020, they've learned the hard way that it isn't always a straight line. So
no, for sure.
This expanded portfolio diversifies that risk, that blended approach to risk. And I think that's why acquisitions happen in moments like this, where they are producing free cash flow.
And then the real question is, what's next? So they had a team that has successfully built and commissioned, well, actually, between those 2 companies, 2 teams that have successfully built and commissioned 2, world-class, world-scale mines in Canada. And they're focusing on other mines in Canada. I don't think they then go buy an old, tired mine in Canada, right? The opportunity is, with that skill set, to look at the rest of the projects that are still currently trading at $8 an ounce or wherever we're trading today, and recognize that plus, as we said, a couple $100 an ounce in capital can be worth, where they're trading, which is probably $1,000 an ounce. It's somewhere in between, right? So I think they're a great example of a strategy that is set up that in a couple of years, exactly what they are going to want is what we have.
Keep doing it.
We're trying, mate. We're trying.